So, hey everyone, I'm just going to do a review of the session basically of Asia and London with some proof of where I'm at in terms of my accounts, so you know I'm legit, and also so you know I'll just we'll be requesting a payout tonight, and just so you know that showing executions live on the account here and why I executed at that time. Um, but to start with, we look at Tokyo. I'm also going to start trying to teach in a very basic way from a beginner standpoint. So I'll go through this for some people who might know a little bit more about trading, and then I will go back to how the markets move, where you can start, how you can predict where price is going to go, because ultimately that's what you're trying to do. So at the beginning of Tokyo, here, I got in a trade to the tick there. So if we go zoom in, you can see that was my entry on this down close candle in this little fair value gap here. Okay, as it hit consequent encroachment, I entered. Hope this chart's big enough. So that's my entry. And why did I think it was gonna go there? Well, as you can see, 6 o'clock to 7 o'clock, you don't trade, okay? You stay out of that. Let the market engineer liquidity, okay? I was looking when this low here, this high, this low here, so you got 3 candles, swept this liquidity, right? So it took out people who were long here, okay? Then what happens is price comes up, down, up again, sweeps liquidity. So anyone who was short here lost, okay? Then comes down. I'm bullish on the daily candle, which we might go to in a minute. Let me just shut the door. So it comes down, sweeps this liquidity, okay? Macro time between 6:50 and 7 o'clock. I know the price is going to head towards these 2 highs. So at the moment, we'd be looking at the graph like this. That's how I was when I took the trade. I'm looking at these highs, and I'm also looking at this high and this high. They're what? Relatively equal. Yeah? So people who've sold have still got their orders here, and they're still resting they're in their profit, okay? I tend to be long when the market's going up because you don't want to try and, at the moment it's very bullish, so you don't want to try and tempt the top of the market, okay? So we're looking for long markets only. And then, so low hanging fruit, if you're new to trading, I was very confident in this, so I held. But I was actually sat with my mum doing this, trying to explain to her how it's all algorithmic and stuff like that. But, so, as the price comes here at 7 o'clock, it immediately starts to trade higher, trade higher, trade higher. So if you're looking for first presented fair value gap, this is the one. So if you to go like that, so first presented fair value gap is the first fair value gap that forms after 7 o'clock, and it has to break through a high. So if you have a look at this high here, it's broken through. I can remove this now so you can see. It's broken through that high, left a fair value gap. So that's the first percentage fair value gap. If we're bullish, it's got to use the first percentage fair value gap to go higher. What reason I have this line was because when I was sat with my mum explaining to her, then it made this high. I was like, that is perfect because what it's doing is creating that sort of the triple channel like this. So it's actually drawing that. So people are going short off here because they think that this is a trend line. This is a retail concept. So basically, I'm using retail for targets. Okay. So your low hanging fruit objective. Let's get the long position out. You're from here. Well, I was confident from this point. Stop loss always below the third candle of the fair value gap. So if I was confident it was going to here, which is a 6-to-1, okay? I'm not lying, look, the execution. This was on my Apex accounts as well, okay? So there's my balance of one. There's my balance on my second one. Can log out of that now, and I'll sign back into my demo accounts after, because that's what I'll do for the rest of the day's practice with demo. I didn't trade the London. I was just up late last night, and I haven't traded London. But we'll go through London session as well. So as you come down and you've taken this liquidity here, yeah, and price is up, I'm not looking at these as relative equal lows because I'm so bullish now as price enters the macro time. Okay, I'm looking at these ones. Majority of the liquidity has been swept. Yeah, smart money is positioning down here, so it's not going to want to sweep that. That's why I'm not seeing these as relative equal lows. I'm seeing here and my targets up here, which is where price goes to over here. Okay. I didn't weather the retracement. I took my profit out. Okay. So trend line, but as price comes up again, I'm looking where the fair value gaps form to indicate to me that I'm correct. So I'll say that again. Look for where fair value gaps form. See, that is terminus. Highlighting from the high to the low. You could use this one if you want. Doesn't matter. Yeah, you're getting close idea is what I'm saying. But I'm using, let's just use this one then, so I can explain to you that you can use it from wherever. So my terminus. Fair value gap. Fair value gap. Fair value gap. All on that quadrant levels. Magic, right? If you were to use the low which I tended to use, which was this one. Which one was it? I used this one. Again, you're seeing the fair value gaps form. So when this coded down, I knew that it was going to go a bit higher. What it did, which I highlighted as well, same concept that happened here, repeated itself. Look, this big. It's faking people. Looking at is like resistance, triple top. Really would like to see that. But if it had stabbed up into that, it had took the liquidity. See, look how you see that's. People are seeing that as trend line. which ultimately the liquidity, taking this liquidity, didn't quite reach up until this one. So it's often a fake out, back it to 50% of the range, and then trade higher. So if the question to you is like, are you going to hold for that higher one when you're so close? So I wanted to see it go up there when I was here, but it didn't. So I had my stop loss. I was holding as long as I could. I had my stop loss. Let's have a look where it was. Oh, I've got to sign back into my account to see that. Bear with. My stop loss was there. I was looking at these two candles, overlapping bodies. It reacted there, and I didn't want it. I thought if it's disrespecting that, then we're going to trade lower, which we did trade lower to the 50% level off that order block. Last down close candle before the up move comes down, tags that 50%, comes up, takes out my ultimate target from the session, comes down, and then it wants to run up higher to take out all that liquidity and keep going a bit higher. Okay, and then starts to engineer more highs to be taken later on in the day. Makes sense? So if you're looking at the dealing range, fair value gaps forming around that 25% level. So measuring gap is a gap that's a fair value gap that doesn't get traded to. Okay, so that is a measuring gap. It only gets traded to when price reach target. Yeah, then the measuring gap's traded to. So until this moment, it's a measuring gap. Now it's just being used now after. But you don't want what if I've entered down here. I don't want to. That's enough. Do you know what I mean? You've got to be happy with that. You don't want to weather this because it might not come back up here in this session. It might flop around and decide to do it later in the day. And I'm not sitting around all day waiting for that. Okay, so you get the main run, take your profits, and get out of the markets. Okay, one trade only. I was on live stream yesterday, and I did take some trades as well, which you can see on previous video. So I did have a couple of losses yesterday, 5 wins. But again, big wins like this. This is the best one I've had. But notice as well, this box is Tokyo Kill Zone, 7 till 10 PM. Yeah. Notice how the price reacts off this dotted line, and this dotted line is average price of the session. So it goes up, comes back down at average price of the session to 50% of the dealing range, high to low, and then trades higher. Again, look at that fair value gap being used. If you go from that high to that low, I'm going to just get you to look at this every single swing high, swing low as a concept. Discount. Fair value gap here, fair value gap here, in that discount or 50% level, and it targets going higher. But like, I was happy with there because you can't guarantee prices, how far price is always going to run past your target once it gets here. Yeah, so once it gets here, you want to take your profit, because once you've reached that ultimate high, if I'd have stayed in this trade and did weather this down to go up, I would have taken the profit here. And again, people might start seeing this as liquidity sweep, but this, you've got to look at as well, when you're looking at liquidity sweep, how much is being swept. Yeah. So that, you think that's going to take out the massive pool of orders up there? It can, but it's a bit unlikely. So that's less confident as a liquidity sweep. This one, again, that's better. Again, but we're not at a macro time. Oh, we start to get to a macro time about here. But again, it's just offering if you go from premium to discount. Discount, same concept is there. Oh. Same there. Entry. Target back up to the high if you wanted. But again, here I wouldn't be too interested in 9 o'clock is really sort of when I don't stop trading. And again, you start thinking to yourself, price could start reversing at some point, which is just traded up here and then started reversing down after taking all that liquidity. Not saying it's not coming back up for the rest of the day. We've took a lot of liquidity. So when it takes liquidity, it has to engineer more liquidity. Yeah, so I'd have liked to seen that high a bit lower down. But it just means these two are relatively equal. This one's in close proximity as well. It wicks out, but the wick is the bodies that tell the story. So I'm looking at these two highs. So for future reference for the next session, you go for there. That's my target. And the lower of the two highs. I think that should conclude the Tokyo session that we've done. And that's the way I've sort of thought about it all. And then let's just extend the first presented fair value gap, which highlighted there. There's another key one here at 721. Them two. Okay. The one I've highlighted, this one is above the new day opening gap, so it could react off that because above the new day opening gap, it took out a swing high and it's bigger. Whereas this one is not quite so big. So when ICT talks about the first presented fair value gap, you could use either of them, but he'll probably gravitate towards this, if I'm honest. I like this one as well though, because of where we were in terms of these highs. So yeah, let's go to what's happened during London. You want to extend these through time as well. So when you double click on extend right here, look, first presented fair value gap, market structure shift, relative equal highs, all of this is liquidity, yeah? So again, if you're not taking big trades, you're targeting this high. There it goes. Notice how I haven't looked at this. And then ultimately, if you're really confident where it's going to go, There's target. And then it just keeps running up. Gets above all of the highs. And then here we are now. We're now at the end of London, so I'm not interested now for a while. But again, look, relative equal highs. So it's engineering could go higher. But again, you've got the market open to be aware of at 9:30. Let's just do a grade. Oh, sorry, of the dealing range again, just to see where we're at. Sorry, I keep deleting this. Fibonacci. See, I've graded this high, this low, and look what you find. 0.25. I'll zoom in so you can see. Mm-hmm. 0.25, just shy of that fair value gap. If you went to this low, you'd have this fair value gap again. It doesn't need to be dead center, but we're roughly speaking. So fair value gap here, 0.25 levels on that fair value gap, 0.5 level, 0.75, terminus. Okay, I'd have used my terminus as the liquidity highs here. Yeah, let's get that array back on. I said the lower high. Just like that. And I just caught the very bottom of the move. Would have hopefully got in at this time, which is 250. This fair value gap I'm looking at to be inversed. So as price comes up, comes down. This is where I'm going to teach you what a breaker is. So a breaker, where you've got a high. Let me see if I can do some drawings. High. Low. Higher high. The last two down close candles, or the last down close candle, you've got to use both of them because they're both together, would be your breaker. Our price respects it. Wicks down into an order block, but can't break the mean threshold. The bodies can't go past consequent encroachment of that breaker. Okay, so that's what your breaker is. It's a low, high, low, higher high. Yeah. And then trades to them last two down close candles. Oh, sorry, should I say bullish breaker should be the up close candle. Same thing, whichever one you used. Let me just double check just the description. Bullish break. We might show you some other examples. It's not very good. Dun, 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 dun. Yeah, so a bullish breaker, you see here you've got the high, the low, the high, and it's this last up close candle. So sorry, where I said the two down close, it should be that up close, but they're the same area. Again, look how priced perfectly. So you've got the high, the low, the high. This green candle here is the one I'm looking at. It's the last up that close candle at a macro time. Here we are. So you could enter here, could enter here. Stop loss has to be below the breaker, which is here. Okay. When I'm looking at PDRays, yeah, I saw this one. I see this one as well, which is the fair value gap. Get rid of the breaker. So that's one teaching of today. Take that note of that. I'll show you a bearish breaker in a minute. Let's see if we can go back and spot one. If you're using this fair value gap, stop loss has to be below this the third candle, this inversion fair value gap. There's a fair value gap there and another fair value gap there, so use the whole thing. And the body's just stop dead on the line. Again, like you could enter there, 250. But your stop loss would need to be below the breaker or the fair value gap. Okay. And that was good stop placement. We got close, but we didn't. You have to be sort of confident where price is going to go to, like the liquidity zones up here. Price is swept here, swept again, so it's making jagged. That looks too smooth. To work out where it's smooth, if you zoom out like this, look at that, like that looks very smooth, doesn't it? Whereas this looks quite jagged here. So yeah, if you target do a rough view of where I would have. $6.29 to 1. Nice. And if you want to ride it up, 10 to 1. So yeah, you can ride the move if you want to leave on a bit of the position. But yeah. So let's go to my indicators and let's go through a lot of things. Also as well, just note on this, midnight price is really relevant during the London session. So the dotted line's midnight. You can get an indicator that just plots it for you. But as it comes down, if we're bullish on the day, we want to buy below the midnight ideally. Yeah, not saying you couldn't buy as price inverts here or anything, or off here, the target here, for example, of the macro time. But you can do that, but the best price is below. Okay, below the midnight. So yeah, let's go back into some teachings now. So that's where I've seen the market. So now we're looking here. I'm seeing a lot of people have made profit so far in the day. Yes, we have relative equal highs. You might want to take that sooner rather than later. What I'd like to start seeing is see how there's relative lows here now as well. So you're trying to highlight where's people's long orders now, because we can keep running higher and higher and higher, but I'm not interested until we've taken some liquidity again. That makes sense. Because if I was to jump in this trade, we don't know, it's not going to come back for this liquidity rather than this liquidity. So could come up here, and then later on in the session, you're going to target here to go higher. So you can still short even if we're long, but I try not to. I'm trying to practice just going long but we're short. So I'll be waiting now till 7 p.m. 7 a.m. until we have the kill zone at 7 o'clock, the New York kill zone. So let's go through the indicators and then we'll get into the very basics. We'll probably go back a step. So you've got first indicator, the trading sessions one. And I've got the times UTC -4 matches up with the chart down here, yeah. New York, London, Tokyo, just copy my times if you like. Notice how, as well as me noticing that on this one, talking about new day opening gaps and new day opening gaps, highs and lows. Notice how the way of confidence me getting in was because this. One second. This new day opening gap, it couldn't even reach down to that. Yeah, so that's giving me a little tip. It's not even reached down to that. And then it's done a market structure shift where it's broken this high here. And then it's a fair value gap one more time and rips. Yeah, so that's the first indicator. The second, so what is a new day opening gap? A new day opening gap is electronic trading hours. So 5 till 6 p.m. the market closes for an hour each day. That is the electronic trading hours new day opening gap. Okay, and these are like magnets on price. Again, didn't reach it, so we're still bullish. Let's go back for some more examples. So this big one's a new week opening gap. So that's also a volume imbalance. So again, at the moment we're very, very bullish because it can't come down to that. Yeah. Let's see. Here's one, Thursday, 21st of May. On Friday it comes down to it, uses it, can't break through it. Okay, and uses it to get run off higher. Yeah, so we're not, as we're looking here, we're not going to short that. We're not in a macro time for a start. It comes up above it, can't reach it, can't reach through it. The wicks go through it, but the bodies can't even touch it here. So So then you're watching that. Market structure shift. Could you see the price come down into this and enter? You're thinking it might, but you could enter off this one. Your stop loss below, you have to be mindful it can reach for the second one, so your stop loss would have had to been here. Okay. Goes up to this liquidity. So that's the new day opening gap, new week opening gap. So I'll just show you my settings for that. You can have 5 of the new week opening gaps, but I tend to just have 1. I just have the new week opening gap in red and the new days in blue. If the new day current is blue, doesn't matter as long as they're labeled. You can have them all the same color if you want. But yeah, that's how it works. Then the dotted line is the midnight price. So again, below midnight price is good if you're bullish. So even if you look now, move this one for a second. At the open, at 9:30, comes up, takes liquidity, comes below midnight price, offloads positions, and rips higher. Notice how this midnight price is being constantly used. Same in the London session. Midnight price being used. Targets are relative equal lows. After the sweep on liquidity, runs to read opening gap. Okay, that makes sense. So you want to practice spotting liquidity. So whereas other people's orders, that's the skill that will take you to the next level. Otherwise, you could be looking, for example, as market structure shifts and just entering off that. Yeah, so practice looking for the liquidity zones. And then the last one I had on here, let's remove all the other ones so you're not confused. Keep the midnight price on there. By 10 o'clock, it's likely to hit 50%. So we're a bit later here, it's 10:06. So we're a bit late in getting there. But if you're bullish on the day, you're looking price can't hit the 75% level of the opening range gap. So the opening range gap is, I have it on electronic trade now as I have the indicator, but doesn't show you, but that's an opening range gap. Friday 22nd May. So 9:30, let's go back to electronic trading hours and where it has it marked out for me because I've got the indicator on. You can do it manually. So at 9:30, this acts as a magnet. So this was 415 price from the previous day, and then we've traded overnight and gapped lower, opening lower than where we were, and that acts as a magnet. Comes down, it can't reach even midnight price this time, comes up, inverts that fair value gap. If you're confident, entry. But look how everyone who's short there it takes this candle, wicks up, takes them out before coming down, failing to take out this low. So that's a failure swing. Comes up, inverts the fair value gap, and then we're targeting midpoint or highs or the resting liquidity above or here. Let's see. See? Takes it out. And that would be enough for me to take. So yeah, that's a good enough example. Sorry these videos are quite long, but you're happy to speed them up if you want to, but honestly, I would take the time to listen and go through this and try to apply what I'm saying into your own way of thinking. So we took out these highs. If it wants to come lower, you want to look back in time and spot where there are relative equal lows, like here, for example. Smart money's positioned here. Add all the indicators back on. And look how much more of a view you get. And yeah, like people would sell here, but then I don't recommend engaging with the dead zones unless you really know what you do. Again, if you're bullish on the day, why would you look for short all-time highs? It's dangerous. There's no displacement here either, you notice? It's just creating that relative equal highs to engineer liquidity. There's no displacement like down here. Displacement, the candles would come strongly through that high. Displacement, same here. And if you look at that displacement, first percent of fair value, it's actually used again. Okay, I don't want to make this video too long because a lot of them are longer, but I'll be making more videos, more tape reading, like this one was a bit more going over the 2 sessions of today. But yeah, if you like this and want to watch more of this of how I see the markets, then subscribe. And yeah, for next time, guys,